Hi, this is Steve from Morriga Financial Solutions, and today we are providing some tips and tricks that we use as part of our onboarding process with new clients. Typically, we work with businesses that they've started out a while back, and they're finding their legs, they're finding their long-term success, and we're working with them to make sure that their vision aligns with where they need to be in the marketplace. We also work with businesses that are successful. They found success, they are at a good place, they have solid client base, solid product or service, and they know that they want to go to the next level, whatever that level is. And we come in with fresh eyes. We take a look at the financials, which are a great place to start because most everything in a company is somehow affected by the financials. And so we'll take a look at that. We'll do a deep dive into that, into the financial reports, and then talk with the CEO. We'll see where the vision is, what the vision has been, as well as what the new vision is. If there's any acquisitions, if there's new products, whatever that might be. Then we take a deep dive and go forward and look at operations, look at everything, and provide recommendations about how to go forward. So that's where we basically start with onboarding clients. But here are some tips that we have for you right now. So one of the things that we do is we want to plan for successes, of course, but we want to make sure that we have a system in place in case there is an issue. If a supplier is late and we need to make a payment, a large payment, we want to have a bank line of credit in place. There's all kinds of ways to make sure that resources are available so that the company is as successful as possible. We also work with, as I said, we work with the business leader, and that can very often lead to us working with the CEO and the board so that there is a real understanding between everybody about where we want to go. We support the CEO to make sure that whatever presentations are necessary, whatever documentation is necessary so that the CEO can work with the board, we do that. We also provide presentations directly to the board. So there's a few things as well, accounting items that are really useful to companies, and something like equipment, making sure that there's money for new and replacement equipment. And what that means is that a piece of equipment is only has a useful life of a certain amount of time. So we want to make sure that we save that portion of the equipment's life every month, and it's called depreciation, but we want to make sure that that is something where it's in the bank such that if we do need to make that purchase, then we can do that. We also might want to save even more than that in case the piece of equipment fails prematurely. And the final piece of advice is working with your bookkeeper. And it's really technical, and it's not known by a lot of leaders unless they're really very close to their financials. But there's a lot of bookkeepers that one of their key things that they do, one of the baseline things that they do, is they categorize transactions. And the reason this is so important is that a bad categorization can put something in a taxable category, not taxable. It can put it in a different cost center, different business unit within your company. It can have all kinds of ramifications. And that's one of the things that we do. We go in and we look at how a company is taking care of their bookkeeping. So hopefully these were really helpful for you, and we look forward to hearing from you in case you think we can help you. Our contact information is below, and we hope you have a fantastic day. Cheers.